Thank you.
So we are in the interest calculation configuration. Define time dependent terms. So what is this time dependent terms? Let us take to understand. Say for example, we have taken one term loan from State Bank of India and the rate of interest is 12%, right? So let us assume that we are in the fiscal year 2018 and we have taken the term loan on 1/1/2018. We have taken the term loan on 1/1/2018, 1 lakh rupees. So when you take the term loan, we post the entry debit to cash account or bank account to SBI term loan account, right? So by virtue of that entry, that is posted to the credit side of term loan account. So by cash, 1 lakh rupees. Then every month the installment is 10,000. So let us assume that the first installment is paid on 1st February. So when we pay the installment, the entry posted is debit to term loan account, credit to cash and bank account, right? So 10,000 rupees. Okay, debit. So assuming that these are only the two business transactions in the term loan account, I want to calculate interest up to 31st December 2018. I want to know how much interest we have to pay up to 31st December 2018. So how do we calculate interest in this case? Normally, what we do is, actually, we have taken the term loan on 1/1/2018, 1 lakh, right? Then you have paid 10,000 on 1st February 2018. That means from 1st January 2018 to 31st January 2018, we have used 1 lakh from the bank. We have used 1 lakh from the bank, right? So on 1 lakh for 1 month, 1 lakh into 1/12 into 12 by 100, which comes to 1,000 rupees. Now, on 1st February 2018, you have repaid 10,000. You have repaid 10,000, right? So from 1st February 2018 till 31st December 2018, that is for 11 months, we have used 90,000 from the bank. So on 90,000 for 11 months, that is 90,000 into 11/12 into 12 by 100. That is on 90,000 for 11 months means 90,000 into 11 by 100 into 12 by 100. Sorry, 11/12. Sorry, again I'm repeating. 90,000 into 11/12 into 12 by 100, right? Which comes to 9,900 rupees. So the total amount of interest you have to pay is 10,900. This is how we calculate interest in the normal way. I hope till now it's clear for everybody. If anybody wants, I will explain one more time.
Sir, one more time, please.
Yeah. See, we have taken the term loan on 1st January 2018, 1 lakh rupees, out of which you have paid 10,000 first installment on 1st February 2018. So from 1st January 2018, right, till 31st January 2018, that is for 1 month, right? We have used 1 lakh from the bank. So on 1 lakh for 1 month, right? 1 lakh into 1/12 into 12 by 100, which comes to 1,000 rupees. Still no clear? Afzal.
Yes, sir, clear.
Now, on 1st February 2018, you have repaid 10,000 rupees. That means from 1st February 2018 till 31st December 2018, we have used 90,000 from the bank, right? Yes or no?
Okay, sir.
Right? So on 90,000 for 11 months. So 90,000 into 11/12 into 12 by 100, which comes to 9,900 rupees. So the total 10,900. This is the
Yes,
amount
sir.
of interest you have to pay to the bank, right?
Right.
So
right.
this is how we calculate interest in the normal way. But SAP calculates the interest in different way. Here, this SBI term loan account is just similar to bank account. So in the bank account, debits are always deposits. In the bank account, debits are always deposits, because when we deposit anything into bank, we debit the bank account, right? Similarly, in the bank account, the credits are always withdrawals. Okay, because when we withdraw any money from the bank, we credit the bank account. So in the bank account, debits are deposits, credits are withdrawals. Okay, so this is just similar to bank account only. So here we have withdrawn 1 lakh from, we have withdrawn 1 lakh on 1/1/2018. So from 1/1/2018 till 31st December 2018, we have used 1 lakh from the bank, right? That means on 1 lakh for 12 months. That is 1 lakh into 12 by 12 into 12 by 100, which comes to 12,000. This interest you have to pay. To pay interest means expense, right? Expense means debit. Expense are debited according to nominal accounting principle, right? So this 12,000 interest which you have to pay is called debit interest. Clear? Then on deposit, repayment means nothing but deposit, right? So you have deposited 10,000 on 1st February 2018. So on 1st February 2018 till 31st December 2018, that is for 11 months, we have to receive the interest from the bank on 10,000. Right? So 9,000, on 10,000 for 11 months. 10,000 into 11 by 12 into 12 by 100, which comes to 1,100 rupees. So this interest you have to receive from the bank. So interest receive means revenue. Revenue means according to nominal accounting principle, credit. So this is called credit interest. So on one hand, you have to pay 12,000 total. On the other hand, you have to pay 1,100, right? So 12,000 minus 1,100, 10,900. This is the interest to be paid to bank. So the rate, the amount of interest to be paid is same, but the way of calculation is different. Means SAP calculates the interest separately on debit items and credit items, and the net amount is posted. SAP calculates the interest separately on debit items and credit items, and net interest is posted. Why so? Because here normally while calculating the interest, the bankers will charge the same rate of interest on the credit items, and also debit items also same rate of interest. But sometimes there may be a need. Sometimes there may be a need to use different rate of interest on the debit items and credit items. That's why we have the facility to apply separate rate of interest on debit items and credit items. Right? So if that is the case, on the debit interest, means interest on credit items, right? We can use 12%. Then on the credit interest, that is interest on debit items, right? We can use. So in order to facilitate this functionality also, SAP calculates interest separately on debit items and credit items. And the rate may be depending upon the time. Sometimes the rate may be changing, right? So the rates depends upon the time. That's why SAP calls this as time dependent terms. Clear? So while doing the step, again I will explain. SPRO. Financial accounting. General ledger accounting. Business transactions. Bank account interest calculation. Interest calculation. Define time dependent terms. Click on new entries. Interest calculation indicator is equal to BD. Just a minute. Yeah. Interest calculation indicator is equal to PD. Currency is equal to INR. Effective from 1/4/2022. Sequential number 01 means first term. Term is equal to credit interest, balance interest calculation. Credit interest, balance interest calculation. Within brackets, select from F4. Credit interest, balance interest calculation. Within brackets, interest on debit items. So credit interest means interest on debit items. Interest is equal to video. Are you getting any disturbance from my side? Any disturbance coming from my side?
No,
sir.
no, sir. No, sir.
Because I'm getting a lot of disturbance from my side. Some band is going on. Ganesh Chaturthi band is going on. That's why I'm asking you. It is getting a lot of disturbance to me. Okay. Reference rate of interest is equal to BD1. So credit interest means interest on debit items, right? So for that, we are going to use the reference rate of interest to BD1. Click on save. Then click on next entry button. Interest calculation indicator is equal to BD. Currency INR. Effective from 1/4/2022. Sequential number 02. Term is equal to debit interest, balance interest calculation. Term is equal to debit interest, balance interest calculation. Reference rate of interest is equal to DB1. So term debit interest, balance interest calculation is there, no? Within brackets. Interest on trade items. Interest on trade items. Click on save, right? See, actually, a lot of disturbance is there, right? So Zoom is filtering the sound to you, okay? So I'm not able to concentrate on the explanation. So from now onwards, we will see tomorrow. Sorry for the disturbance, right? In Ganesh Pandal, some Nimajjanam is starting. That's the reason why a lot of sound disturbance is there. I'm sorry.